Good afternoon. Welcome everyone to the Miami-Dade Chamber of Commerce, ABCs of Business, a webinar, bookkeeping, accounting, and taxes. My name is Matthew Pygott, and we're going to get started in 5 minutes. We are going to go live on Facebook. If you are on Facebook, definitely make some time to share this to people who may need this information. Remember, we are talking about the basics of bookkeeping. There's a lot of people that have businesses out there, and many times the financial aspect is something that is not taken as seriously. And today we're going to focus on the basics of bookkeeping. So feel free to begin to share this, let people know that we are here, we are live on Facebook. Feel free to invite your friends. We are here, and I want to thank each and every one of you for joining us today. This is an extremely important part of what we do in terms of telling people how to literally put their business infrastructure together, understanding the basics so they can scale and grow by accessing capital, government contracts, and just being a successful business owner for their families. So looks like we are. Good morning, Crystal. Right now, I am in the process of getting this Facebook. It just showed me an error real quickly, so hopefully it will come up on live and Miami-Dade Chamber of Commerce. And yes, now we are live. So go to Miami-Dade Chamber of Commerce Facebook page, and you can share this webinar to your audience and let them know about this information. We're going to give another 2 minutes to get people in this. Feel free to use the chat, say hello to others. We will be using the chat to or any questions that you have, and also you can use the Q&A box for any questions. We have two amazing presenters with decades of experience as accountants. Hervé Bonny, of CEO of Bond Accounting, and Stephen Enriquez of SJH CPA. Many years of working with small business owners just like yourself here in Miami-Dade County and South Florida. So looking forward to seeing each and every one of you, hearing your questions. And remember, this is a business event. So you should be putting your contact information, your business in the chat. You never know who is on the line. You never know who may need your services. So make sure in this chat, you're putting what you do, your business, your contact information, so that you're constantly using this, not as an opportunity for you to learn about how you can grow and develop your business, but also marketing your business. There are people in this chat right now from business services, attendees from Miami-Dade County, Office of Economic Opportunity at Miami-Dade Public Schools. I see our partners at the SBDC Center. So there are a few others here on this call. So make sure you put your information in the chat so people know who you are. All right, George from Homestead, a farmer in the Redlands. All right, and he's actually looking forward to replacing the accountant. That's good to know. All right. So, all right, it is 10:05, and I want to welcome each and every one of you to the Miami-Dade Chamber of Commerce SBA Community Navigator Programs Technical Assistance Workshop. This is a series of workshops we're doing called ABCs of Business to help business owners understand the basics of business. And this is a partnership with the SBA. You may have seen the partnership with Miami-Dade Chamber of Commerce and the SBA. You may have heard about the American Rescue Plan Act that was passed last year. And one of the things that they wanted to do to rescue America was to invest in small businesses. And you saw that through the EIDL, the PPP, and many other business resources. But another hand of that is being able to provide technical assistance to business owners, helping you understand how to get your business to where you can access those resources, can access government contract. So what the Community Navigator Program is, it creates a hub, which is led by the SPD Center at FIU. And we're spokes, and Miami-Dade Chamber is one of those spokes. So it's a coalition of partners that received a $2.5 million grant to create a strong local community navigator network to assist social and economic disadvantaged businesses with consulting, mentoring, and training. We are targeting minority, women, veteran, LGBTQ businesses in Miami-Dade County. That is our target. And there are a few of us, as I said. The hub is the SBDC Center at FIU, but we have partners such as Startup FIU Procurement, Prospera, Ascendus, Branches, and the EDC of South Miami-Dade. Each of them have resources and specialties that give that wraparound services that you may need in order to get your business up and running. So today at the Chamber, we've been working on developing a series of workshops to help you understand the basics. Because once you understand the basics, you have a strong foundation to where you can do just about anything. Majority of the reason why business owners aren't taking advantage of capital, of government contracting, corporate contracting, the things that can help them expand and grow is because they don't have their books together. They don't have their licenses together. They don't have a business plan. So we're focusing on teaching you the basics, the ABCs of business, so you can have those things together. And we do these workshops to bring in many of the experts to come in and tell you those basics. And then we provide one-on-one technical assistance with you so that you can learn, take this information from this and apply it to your business. That is what we're here to do today. And we have two presenters that are coming up. We have Stephen Enriquez. I'm going to pause so they say hey before we bring on Hervé. So Stephen Enriquez has been a long time member of the Miami-Dade Chamber of Commerce, provided expert assistance and accounting to us for many years. And he will be coming on after Hervé. Hervé had a conflict, last minute conflict, but he did not want to miss providing you with the information that you wanted. So we actually he took the time to do a video of his part of it. So we're going to start off by getting Hervé to come in and share his resource, his understanding of those basics of accounting. So give me one moment and I'm going to start that.
Thank you, Matthew.
Right now.
Glad to be with you and our members today. So I'm gonna jump right in and I'm gonna try to use business owners language. So we're talking about accounting and bookkeeping. So before I go into why is that important, let me just jump on to a quick definition of the difference. So bookkeeping, we could say quick and dirty, is the recording of transactions in your business. Everything flowing in, everything flowing out. You must have that recorded. Now, accounting, we can say, is the next step to that, is how do we get reports? What is the system that all those transactions that you're recording, how are they flowing through? Okay, and as I said, this is very important. A lot of small businesses don't get to do that. Now, I'm gonna go into details, but I would strongly recommend that you hire someone to do your bookkeeping, because really one of the big challenges of our local businesses is loss of potential. If you are the business owner, your time is not served attempting to do these things. But I do want to share it with you. I want you to know what's important and negative situations to avoid. The other thing to keep in mind is that everything I'm going to be talking about, the recording of activity in your business, is to get you to the point so where you see how your business is doing. Is it growing? Is it improving? Are there areas that you need to watch for? All very, very important. Now, we do know the IRS is out there, right? And one of the reasons why you have to get your books straight is because of compliance. They don't tell you how you have to keep your books, but they do say that when you're presenting to them, that it has to be ordered, it has to be logical, it has to make sense, okay? And it has to be complete. So if you ever have to go before the IRS, it's a little late then to be trying to get everything in order. Okay, so those are important things to keep in mind. Let's jump right to best practices because I want to share that with you. You have to select a bookkeeping software, right? And there's a few out there, QuickBooks, Xero, but you got to choose what's going to match your needs. You know, what are you doing in business? The important thing, one more thing on the software, there's programs out there where as you're running expenses, and you have to keep those receipts, but we don't want to keep paper. But as you're running expenses, you can take pictures of receipts and upload it straight into your system. So these are quick ways, efficient ways of getting payments, expenses, receipts into your system. Remember I said the key to bookkeeping, which is the underlying thing to everything we're going to be talking about here. You have to have the transactions recorded so we can look at them, so we can follow trends, but the key is to getting those transactions recorded. So one important thing, we've probably all heard this before. Unfortunately, some of us are still violating this, is separating your business activity from your business activity. You must have separate accounts. Okay, this is a big no-no. This would get you in trouble or worse if you're not separating them. Of course, there are going to be times when you need to pay yourself. So if you need to pay yourself, you do it legally and properly. You run payroll if that applies to your business, and you pay yourself as the owner. But you don't want to be mixing, commingling is what it's called, your personal and business. Numbers that you got to know in your business. One of them is cash. I'm just going to run through the titles and then I'll break them down. Cash, your sales, your expenses, accounts receivable, which means what is owed to you, what you're expecting to come in, accounts payable, what you owe to others, and the net income in your business. And you should be looking at these numbers maybe daily, if not that, but at least every few days, and definitely looking at summaries weekly. So cash, let's talk about cash quickly. Looking at your bank statement once a month, that is not enough for you to be staying on top of cash. That's the difference like between taking a picture and seeing the flow. We've all heard the term cash flow. You want to track the cash flow of your business. You want to know everything that's going in and out and how it's affecting cash each month. Is cash going up or down? You want to stay on top of that. Sales. There's a lot of activity in your business that's driving the sales, right? It's not just sales happen. Someone is making those sales. Are you doing advertisements? Are you having promotions? Whatever it is that you're doing, if you can track that, then there's a saying that what you want to improve, you have to measure, right? And basically that relates to everything we're talking about here. So if you have, well, we all have activities in our business that are leading to sales. If you're measuring them, and also important, if you're measuring them separately, then you could look at them and say, is this individual activity getting me more sales? If it is, I should increase it. If it's not, I should decrease it and do something else. That's really right there. That's one of the keys that helps business grow. And those who can't see it, unfortunately, there's some neighbors of ours who can't see it because they don't have the systems in place. It's one of those situations you need to stay away from. It hurts businesses. So next, among the numbers that you got to know, expenses, you need to be able to see what your expenses are on a weekly basis. Accounts receivables, if people owe you, you need to be on top of that. You don't want to let that get old because the older it gets, less chance you have of getting paid. Accounts payable, what you owe others. Again, you want to stay on top of that. If you're forgetting to pay people on time, that's a way not to have those partners, not to have those vendors that you need when the time comes. And finally, your net income. You need to know after you've made your sales and you've paid all of your business expenses, what is left for you? What is left for your business? You got to know that number. Is it increasing over time? We have to track trends, right? You want to know if things are decreasing or if things are increasing. If your net income is getting higher, that's a very good sign. Again, remember I said all of this, you want to know are things getting better or worse. Employees. So many of you may be thinking about hiring employees. One of the things that happens is we're not sure, can we afford it? How long is it going to take the employee to get productive and profitable? If you're looking at trends, that will help you make the decision. If you're following your cash, that will help you know that you need this much money in order to carry the employee for 3 months or 6 months before they get profitable. The other big thing that we see a lot, right, is the independent contractor question versus employee. Now, this is not something that you decide. This is determined by the IRS based on, is the employee truly independent? Who's controlling their work? Do they have other clients and you're just one client? So all that is very important. You get more information on it if you look up employee versus independent contractor on irs.gov. But this is a very serious issue, because if you misclassify a 1099 person that should be an employee, the IRS could come back to you years later and say, I now want the taxes, the interest, the penalty for all of that for those 5, 10 years. That is an event that could end someone's business. So you definitely want to look at that very carefully. There is this issue, right? We are working on our businesses, building value, servicing people, providing good products. What we see very sadly sometimes is that at the end of that time, if you are looking to retire, if you're looking to sell your business, you should be able to do that. Unfortunately, what we see a large percent of the time, it's more than 65% of businesses, when they get to the end and the owner wants to leave and retire, they're not able to sell. And the reason they're not able to sell is because the books are not in order. Think about it. If you were thinking about buying a business and paying $250,000, $1 million, $10 million for it, you want to see the value of what you're buying. You want to see the detail of the sales, not just that it's making X amount of sales, it's making $1 to $10 million per year. You want to see how they're making that. You want to see the expenses. And most, as I mentioned, most small businesses, 65% and higher, are not able to show that at the end of the business owner's term. And that causes buyers to not want to buy those businesses, and those business owners are not able to sell and retire. So that's something to keep in mind. You know, when you start there's a famous saying, start with the end in mind. When you start your business, or as you're growing your business, you want to think about the end. And even if you're thinking you're not going to sell, you want to be prepared and have a business that's working well, whether you pass it on to your children, or if you do decide to sell, so that you're able to. Very, very important, and a situation that you want to avoid. So if I can quickly summarize what we went through accounting and bookkeeping. And accounting is the basics of recording everything in your business. You must have that, because everything else is built on top of that. You know, you're watching trends, you're figuring out what's happening. Is your business getting better? It starts with that. Your must-know numbers, cash, sales, your marketing activity, expenses, accounts receivables, accounts payables, who you have to pay, and your net income. What remains for the business at the very end. A couple of more things I'll say about cash, since we have a couple of minutes. With cash, it's also important. You want to look backwards and see the trends, and you want to be able to look forward and forecast what might happen. So what do I mean? You want to look backwards and see, so for example, the last 3 months, what's happened? What's my average sales each month? What can I really expect? If I do the same things I've done, what can I expect in sales? And then if I have the same typical operations, what can I expect in expenses? That's looking at trends. And if they start going up and down, then I know I need to do something, especially if it's expenses are going up, I know I need to do something to fix it. Looking forward, you know, at certain points, you have to make tax payments, right? You have to make your estimated tax payments. If you have to purchase large items like equipment, if you're going into a large project and you know you have to temporarily hire people or something of that nature, you need to be able to say, I'm sitting on this amount of cash. In 60 days, these are the special or unusual expenses I'm going to have, extra equipment, and be ready to pay for that, so that you can make that decision. You know, the end result of all this is to put you in a position to make good decisions in your business, so that you are more profitable. And everybody has their point where they want to grow their business too. You may not want to grow your business, you may just want to improve it. But using information that's already flowing through your business is the way to do that. So with that, I'm going to stop there. It was very good sharing this information with our members, Matthew. Thank you very much.
How can business owners not commingle? What are some best practices, some habits they can do to not commingle their funds and use their use their business or personal expenses?
Okay, good question. So, first is you have to separate, right? So you have your business account, you have your personal account. So everything that is business related should stay in the business account. Everything that's personal should stay in your personal account. As you're recording business transactions, one thing that you should record is the reason why. It's not just okay to have the receipt. What is the business purpose for that receipt? So if you're writing on the receipt that here's the business purpose, then you already know that should go to the business account. What happens a lot of times is we need money, and so we take it out of the business account. We have a personal expense, so we run it through the business. So you just want to avoid all that. So have your personal expenses go to personal. Again, of course, you are the person that came up with the idea. You created this business. Of course, you should be compensated, but then compensate yourself the direct, proper, and legal way. It's either payroll or distribution, as we talked about, that goes to you at the times that you want them. So you do that instead of, oh, I have a personal expense, but I'm going to run it to the business. You want to avoid doing that. So you skip doing that, and you don't fall into those problems.
What is another way someone can pay themselves? So outside of payroll, how can they pay themselves?
Good question. So part of it is going to depend how your business is set up, right? Whether you're sole proprietorship, corporation, but we could run through a couple of scenarios. So if it's not payroll, you can pay yourself a distribution. If you're the owner, it depends if you're working in the business. So you can pay yourself a distribution. Of course, however you're doing it, you want to record it, the amount, the time, the purpose. If you're doing payroll, there are deductions that you're going to have. If you're doing a distribution, you of course record that you are the owner and this is the amount that's coming to you. Is it going to be monthly? What are the details? Hopefully that answers your question there. So Matthew.
When you say distribution, like what does that mean? Do you write a check out to yourself? You just transfer it from your bank? Like, what do you mean?
Okay, so the distribution means the payment to yourself, whether it's a check or a transfer, those are equal. These days we try to run as few checks as possible. We do direct deposit, but you can transfer the amount from your business account to your personal account. And as I say, you record exactly what it is. So a distribution, you would not be deducting payroll taxes because you're paying yourself as owner. However, at the end of the year, you're still responsible for paying income taxes on everything that came to you. So you have to make sure that you're counting, keeping track of that, keeping track of the amounts so that you're ready to pay taxes and you're paying your estimated taxes. But so as a distribution that's being paid to you as owner, you don't have to pay payroll taxes exactly. Payroll, you do that officially as a payroll run.
As new business owners, some of us can't afford an accountant or bookkeeper at the very beginning. So what are some basic practices that we should have in place, best software or whatever we should use in order to keep our books together until we get to that point where we can hire someone?
Okay, so that's a difficult question, but I'm going to try to give an answer. Okay, so you're running your business. So as I recommended, you should hire someone even before you think you're ready, because you want it done right and your time is better suited running and growing that business. But okay, so if you decided that you're going to do part of it, then you want to record everything. So whatever's more comfortable for you, if that means an Excel spreadsheet, if it means Google Sheet, if it means getting some really basic accounting software, there's a few out there, then select those. But what you want to do is you want to try to be as accurate as possible. You want to get your bank accounts reconciled so that you know at the end of each month what you thought was there is actually there, and you have that reconciliation that proves that you've matched them. But I would say start out that way if you must. But like with everything else, there's a lot of things in our businesses that we should not be doing. And by doing them, you take focus away from what's most important to you. You know, if you really also, if you want to grow your business, you have to focus on the high value tasks, meaning the big stuff in your business. Every time you focus on the small stuff, it pulls down your average, it pulls down your focus, right? You got less time to do the big stuff. We all have limited times. But if you must start that way, that would be my answer. You know, make sure you stay as accurate as possible, because it's going to cost you a lot more if you have books with a whole lot of errors that someone has to fix later. All right, so you want to be as accurate as possible, as detailed as possible. I'm going to say write everything down, but I don't mean with a pen and paper. You know, again, I mentioned tech through here. You want to use technology to get this written down one way or the other.
Thank you, Hervé. As you see, he touched on a few areas that are so essential to us as business owners, especially new business owners. Commingling was one of the biggest problems we find as those that help out business owners with separating their funds, making sure they're paying themselves, and then tracking and recording their transactions. If you want to give an accountant a headache, don't record those transactions, or just don't know what those transactions are. That is one of the hardest things to do, and we want to make sure you do that, and that's why we focused on these basics. So I want to turn it over to our accountant, Stephen Enriquez, and really give you more insight into the tax side. So there's steps when it comes to bookkeeping and accounting. Bookkeeping is the first step. That's the recording of those transactions. Accounting is the software and the system you use to produce those statements and analyze the records. And taxes is what you got to submit to the government. And with that, I want to turn it over to Stephen Enriquez to really share that knowledge and information about bookkeeping and taxes, accounting, and all that. Here, Stephen, you have the floor.
Okay, great. Thank you. Good morning, everyone. I kind of went through who are the participants, and I see some names that I recognize, so I'm glad to see everyone here. Boney went through a few things. He went through a lot of things, you know, and a lot of good information. I want to kind of start with just kind of step back, because this is the ABCs, and let's talk about from the beginning, incorporating your business. And the thing about that is just understanding the differences between the different types of corporations and what the rules are for each. I'm looking at the chat, and I know a lot of you announced, you know, your businesses, and I see a lot of LLCs and whatnot, and that's great. But do you understand what that means? Because a lot of times I'll ask someone, a new client will come in, they have a company and all that, an LLC or what have you, and I'll ask them, okay, well, you know, how are you being taxed? You know, what's your tax treatment? And they'll say, well, I'm an LLC. And that means absolutely nothing. The great thing about an LLC is that it's flexible. It has, there's different options of how it's going to be taxed. The IRS doesn't, you know, there's no LLC form with the IRS. It's, you know, you're an LLC, okay, you can be treated as a partnership, as an SCorp, as a C-Corp, or disregarded entity. So you need to know which one you are, or how you're being treated, and know what the rules are for those, and which one's best for you. And the thing about an LLC, which again, I'm not down on LLCs or anything, is good because as you grow, you might need to change. When you first start out as an LLC, you're small, not much income, or maybe you're incurring some losses. You might want to be what's called a disregarded entity. And there's some questions. I'm not going to get too deep into all of that, but then as your business changes, if business grows, you might switch over to being an SCorp or what have you. So there's, so the first thing you need to know is, what are the rules for how you're set up? And are you set up, the most beneficial way for yourself? Because I run into that all the time. People who, they just set up a company, or someone set them up, but they didn't really explain to them what that means and how that, how you progress. Like some of the things Boney said, he mentioned about distributions. What he said is correct, but depending on the company you're on. If you're a C corporation, you don't do distributions, you do dividends. He mentioned payroll. Well, if you're a disregarded entity or a Schedule C filer, and I know I'm throwing out some terms and we can clarify whatever anyone has any questions on. But if you're a disregarded entity or filing a Schedule C, meaning as part of your personal return, then you don't do payroll because all your income, all your net income is taxed for payroll taxes already. So there's no point in doing payroll. You're already paying payroll taxes on that front. Also, for partnerships, there's some of that will be taxed for payroll as well. So again, you got to know what lane are you in and understand what the rules of that lane are and make sure that it's you're in the right lane for you. So that's basic step number one. What's my structure? How am I going to be taxed for my business? And then once you're set up, then obviously a lot of what Bonnie said, I fully agree with as far as tracking your activity, know what your, what some of your numbers are. One of the things I do, someone will call me out to meet with them to talk about, potentially working together. And one of the things I ask, is, what's your AR? Who owes you money? And if they have to, I've been there where they're like running around, oh, we have some, and they're trying to pull together and figure that out. If you can't just pull up a sheet and just say, here it is, then you have a problem. That's money out, out on the street that you need to be on top of constantly and following up on, because, that's cash. And that's bottom line with business. And, that's, I know the program is called the ABCs. And, someone told me a long time ago, as far as business, the ABCs of business are all about cash. That's what's ABC. That's it. If it's not cash, it doesn't make it any point.
AR, Stephen?
Yeah.
AR. What does AR stand for?
I'm sorry, accounts receivable.
There we go.
As Bonnie mentioned, yeah, who owes you money? Like we have our clients and we send them a list of their AR every week, just so they can see where they stand, and they know, okay, here's the people I need to follow up on, this week, because they might be falling behind or what have you. But again, that's like, Bonnie mentioned, as far as just keeping track of your activity in your business. And like and again, I'm going to repeat some of what he said because I want to emphasize, and then I'll also add a few other things. Keeping track and, finding a system that works for you. Whatever works for you, as long as you do it. The worst thing that happens is I have clients that say, oh yeah, I'm going to use Excel, or I'm going to use QuickBooks, or I'm going to do this, and it's usually the beginning of the year and they start off great, January, February, March, they fall a little behind. April, I'll catch up next weekend, and then by the time the year end comes, there's nothing after July. So they pretty much let it go because you're running your business, and that's fine. That's what you got into business for, not to do accounting, to do your business. So that's where it comes. If you're gonna do it, God bless you, just do it. Is if you come to me at the end of the year and you half-assed it or stopped in the middle of the year or whatever, I'll be happy to to pick it up for you. It'll cost you, but I'll be happy to pick it up for you. Or you can just hire someone to do it. That's and that's what we do. Our motto is we make your business our business, meaning we treat our clients as partners. We're a partner in your business. We take care of the back office financial stuff, whether that's payroll, bookkeeping, sales tax, obviously filing income taxes. We take care of that so you can go out and grow your business, get new clients, deal with the clients you have, and all the other stuff that keeps you busy 24/7, and not have to worry about doing the day-to-day bookkeeping stuff. Obviously, you need to be involved in that because, like we said, you need to know what your accounts receivable are so you can follow up on that. You need to know what your cash is looking like, both currently and, as Bonnie mentioned, as far as with your plans going ahead. So you're never going to be, oh, I'm totally out of the financial side. That's then you're not running your business. But you can at least get out of the day-to-day minutia of tracking and all that by hiring someone, whether that's an external accountant or somebody in-house if you're if you get to that side. So again, tracking is very important. And one thing he didn't mention is budgeting. We talked, you kind of mentioned forecasting and planning ahead. Budgeting is key. You got to have a plan for yourself. Now, yeah, we set up a plan. Things are never gonna go the way we thought they were or hoped they would, but at least you have, something to compare to what your initial thoughts were, and then and then as things veer off one way or another, at least you can say, oh, you can compare to that original plan and see, okay, here's where I thought I'd be. Why am I not where I thought I'd be compared to where I am now? Or how'd I get, I'm way ahead, great, so you can kind of see where you're at, and you can use that to guide you, to guide your decision making as the year goes along, and then obviously the following year and so forth and so on. So those are the big ones. Bonnie, like I said, Bonnie mentioned a few of those things. As far as taxes go, we can touch in a little. I know Matthew mentioned a few things that he wanted me to just kind of touch on. Some of the bigger expenditure questions people have that I run into all the time is like home office. Everyone wants to take the home office deduction. It's not available to everybody. Again, depending on what kind of company you're set up as, how are you structured, how are you being taxed. Automobile use, mileage. That's another one that people get a little confused because you see all these ads or YouTube videos that say, oh, you can write off your car, get your dream car and write it off through your business. Not exactly. Obviously, if you buy your dream car, that's great. But if if your business is to be at home and you're on the phone, on your computer 24/7, you don't go anywhere, you're not really using the car for business. So, and even if you are, it's like how much is business, how much is personal. So you can't write off 100% of your car if you only drive it 10% for business. The other 90 is you taking your kids around for soccer practice or whatever. So again, those shocking headlines you see on videos and commercials or whatever, there's more to it. There's always more to it. This is the IRS we're talking about. The IRS is not stupid. The IRS has been around for a long time, so they've seen it all. And so they have rules for everything. And they have exceptions to those rules. So you got, so nothing is as simple as it seems. And I think Moni kind of mentioned as far as equipment, yes, you're able to deduct equipment fully right up front, especially large equipment that you might buy for your business. So you can get that deduction right away. So you might buy a $5,000 piece of equipment or even just a laptop, even if it's just and you'll be able to deduct that fully right away. Now, the caveat to that, like I said, there's always exceptions and not everything is easy, is that you have to be profitable to be able to take a full deduction. So if your business is losing money, you can't take that full deduction. It's not going to let you, if you had a $1,000 loss, but you bought a $5,000, they're not going to let you take a $6,000 loss. That's not going to happen. Again, the IRS is not stupid. They've set these rules up for their benefit, not for yours. The key is try to work those rules as best you can to get the most out of them. So yeah. Anyway, so those are the key things I wanted to kind of throw out there. I'd like to I'm more of an interaction guy, so I'd love to take any questions anybody has. I know I only threw a lot out. I threw a few more things out. So if there's any questions anyone has, can we open it up now, Matthew, or did you have anything?
Of course. So definitely now's the time to put your questions in the chat. You can also raise your hand and we'll bring you on, but we'd like to make sure that we hear from you. This is your time to ask questions. I actually have a bookkeeper on the line too that can also answer some questions that you have. There are a few things that you touched on, Stephen, and I think it is very important. And a lot of times business owners, you hear both of these accountants saying almost very similar things. It's because the basics of understanding cash, understanding your accounts receivable, those are the biggest challenges entrepreneurs have. And they come to accountants lacking this understanding. So when we first started off with understanding what system, what structure works for you, and I'm glad I see Carolyn has a question in the chat. And Carolyn, make sure you put your business and what you do, because we always here to shout out business owners along with their questions. So Carolyn asks, when should you consider moving from an LLC to an LLC SCorp?
Okay, well, just to clarify, if you incorporate it as an LLC, you're always going to be an LLC. That doesn't change. The question is, how do you want the IRS to treat you for tax purposes? That's what we're talking about. What Carolyn's kind of saying is, like I said, you could start off as what's called the disregarded entity. So you could tell the IRS, hey, IRS, I'm an LLC. I want to be treated as a disregarded entity. This is an option if you're a single member LLC, which is what they call, it's an LLC that only has one owner. So you're the sole owner of the company. And this is a way to start for most small businesses, because the benefit there is you file it as part of your personal return. So you don't have a separate return you have to have prepared. It'll be part of your personal return. And it's just what's called a Schedule C, just a couple extra pages into your personal return. So the benefit is there. It's simple, one less return you have to file. The downside of being a disregarded entity is that, like I kind of mentioned earlier, is that all of your income, if you are profitable, all your income is not only subject to income taxes, it's also subject to payroll taxes, which is about a 15% tax. So if your company made, after expenses, $10,000, not only are you going to pay income tax on that $10,000, you're going to pay about $1,500 in Social Security and Medicare taxes as well. So what we normally recommend, we'll set up a new company, small company, we'll set you up as an LLC, we'll set you up, we'll say, okay, we'll have you treated as a disregarded entity. But then once you start becoming profitable, that's when we say, okay, you probably want to move over to an SCorp, and I'll explain why in a second. Usually my number is somewhere around $30,000. If I'm making $30,000 now, being a disregarded entity is costing me about $4,500 in additional taxes, Social Security, Medicare taxes. To me, that's when I say, hey, I'd want to be an SCorp. You might want to change when you're 20. You might want to change when you're 50. It's totally up to you, but you just have to know what you're dealing with there as far as that additional tax you're paying. Now, the additional tax is going towards your Social Security account, so that's something else to take into consideration, depending on your history and your feelings about Social Security in the future. And the benefit of going to the SCorp is that you avoid those payroll taxes. Now, what happens with the SCorp is the IRS says, again, the IRS is not stupid. So the IRS says, okay, if you're an SCorp and you work in this business, we expect you to pay yourself a reasonable salary. Now, what is that reasonable salary? That's open to interpretation. But the point being is, let's say that you're making $30,000 net income, and you decide, okay, I'm going to switch over to the S corporation so I can avoid that $4,500 of additional tax. I would say, yeah, do that. Now you might want to pay yourself something, but you're not going to pay yourself $30,000, obviously. You might pay yourself $10,000 or $15,000. So yeah, you're going to pay some of that payroll tax, but you're not paying it all. So instead of paying $4,500 as a disregarded entity, you move to the S corp, and you might pay $1,500 in payroll taxes by paying yourself some payroll and not doing the rest. So that's, again, her original question is, when should you do it? That's kind of subjective. When you think, when you feel that it's worth it, but just know why you're doing it. And the reason is for the tax savings, basically. So that's my answer.
Awesome. So we got a few questions coming in on the chat and the Q&A box.
Okay.
One from Melissa. I'm gonna ask her last question first. What does your shirt say?
I'm an accountant, so to save time, let's assume I'm never wrong.
Okay. Hey, you'll be surprised as much time people ask a lot of questions of accountants and try and throw things out at them and challenge them. And you're paying them for your time. So remember that. All right. So she also asked, she's interested in starting her own bookkeeping business. Any recommendation and training? Do you hire remote bookkeepers helping your business, or do you handle all that in-house?
I do have some remote people that I use for special projects, but I have 4 employees, so I keep them busy with our clients in-house. So that's what we do. As far as training goes, obviously, education. I don't know if you have a degree in accounting or not. That's always a good place. The best education is to work for someone. Like I did 10 years in public accounting with Coopers and Lybrand, PricewaterhouseCoopers. Those are some of the biggest firms out there. So that's my background. Also, obviously, getting training in like QuickBooks, because that's the #1 software out there that people use. So you need to understand how that works. I'm a QuickBooks Pro advisor, so we're intimately involved with QuickBooks, and we provide discounts for we get discounts from them that we pass on to our clients for software and all that. So those are the so that would be the biggest thing. Back education, get some experience working for someone else for a while maybe, and knowing the software that's out there. Whether that's QuickBooks is #1 because everybody uses it, and then there's a few others, Xero and I can't remember a few other names out there, but you get what I'm saying.
All right. We have another one for Rashandria Thomas. I hope I said that right. She's a beauty salon owner. And she's asking, what is a reasonable amount to pay for an accountant for a small business that is just starting the process? This question was going to come. So books are up to date. They're 3 years of business. And now they're looking to secure an accountant. What is that reasonable amount?
I guess it depends on the services that you're looking for. Right? If you're looking for a month-to-month, which is what we normally do for our clients, we do month-to-month bookkeeping. We provide reports to our clients, and there's a whole list of other services that we provide in our package. So it really depends on what you're looking for. That could be anywhere from, for us, very on the smaller end, you're looking at $250 a month, which would include your taxes at the end of the year, to on the bigger end. And I know you're not there, but we have clients that we get 4,000 or 5,000 a month. Again, more involved, we provide outsourced CFO services. So we do, so it really depends on what you're looking for. The key is, I had an article about this as far as pricing goes. The key is, knowing what you're getting and making sure that you feel that what if you're able to focus more on your business, remove the issues. For example, I've seen clients where I've come in and just looking at their books, what we charge them is less than what they're paying in penalties and late fees and everything else that they're incurring because they're not doing things right. So I save them money just by doing that. So just by getting it right, you avoid a lot of headaches. Forget about the stress and the time that they take to fix issues or whatever. So take all that into consideration. Listen, I've seen things where I've come in and someone was charging somebody some exorbitant rate and not doing what they, anything close to what they should have been doing. So I'm not telling you whatever someone says is good, but take into consideration what you're getting more than just somebody's doing your numbers for you, hopefully, or you should be anyway. You should be getting a partner in your business, someone that can answer your questions, help you, give you some guidance, referrals, like, I have clients, we're looking to expand, we need loans. I have referrals, I have people I know that I deal with, bankers and attorneys that I could help, and we can facilitate those activities. The biggest thing that can, I don't know what happened, but, when COVID hit and the PPP and the ERTC and all these things came out, and you realize, and some people couldn't get it because they didn't have the books and records together, or they weren't paying their people correctly, or what have you, and I put out an article and I said, don't let this happen again. don't let yourself get caught short when an opportunity presents itself. Now, obviously, hopefully there's not another big COVID thing, where all this happens, but there's going to be some other opportunity in your business. I've had instances where someone calls me, oh, I got this opportunity with this new client, some big client. So, they bag a big whale for their business, but that whale expects them to have certain things in place, and they don't have that. And now they're going to lose the whale because they don't have their financial information and records in place. So don't wait for the opportunity to come and then try to get yourself right. Get yourself right so when the opportunity presents itself, you're ready to go.
Exactly. Well, those words are right on. I work with a lot of business owners, and the amount of transactions that they have that is not right, and those overdraft fees, you'll be shocked and amazed at how that take away from your business, and then also the stress on your mind of not knowing where your money is. And when you get an accountant, you're getting a partner in your business that can handle your finances. And that's how you want to look at it. You want a partner in your business that can help you understand your money and that can handle that part for you. So very good question, Roshandria. We have another one from Alfonso, owner of Integrity Contracting and Services. As an S-Corp, you say you pay yourself something so that those profits go through payroll tax, but does the other profit from the business get taxed?
Okay, I think I understand what he said. Yeah. So as just a quick example, so again, let's say your net income is $50,000 and you decide, okay, I'm going to pay myself $20,000. Okay, so so now the business's income is only, we're talking rough numbers, we're leaving a few things out, but now the business's income is $30,000. Well, as an S Corp, that $30,000 net income of the business is going to be reflected on your personal return, and you're going to pay income tax on that 30. That 20,000 that you paid yourself as payroll is also going to be on your return because that's your W-2 wages. So at the end of the day, you're still going to show $50,000 and pay income tax on the $50,000. The thing we're trying to avoid or minimize is how much of that payroll tax you're paying. If you remember, originally we were talking about being taxed as a disregarded entity versus being taxed as an S Corp, what the difference is. And that's what we're talking about, is avoiding or minimizing some of that payroll tax. Income tax is income tax. You're going to get taxed one way or another. Now, the benefit of an S Corp versus a C Corp, which is a full-blown corporation, the benefit of the S Corp is, like I said, whatever that net income is gets taxed on your personal return. And normally, there are exceptions. Again, there's exceptions to this rule, but normally you're getting taxed on your personal return at a lower rate than you would if you were being taxed at the business rate that a C corporation is taxed. So again, you got to know what lane you're in and what that means. And so there might be a point, like I said, you might start off as a disregarded entity, as an LLC that's treated as a disregarded entity. You might grow until the point we say, hey, you should be an S Corp. And you might continue growing, and we might say, hey, you should be now a C Corp because of the amount of money you're bringing in. So different corporate structures fit for different situations. So you got to know which one works best for you. And again, that might change over the life cycle of your business.
Awesome. All right. And the last question we have is from Pam Chin. She's the CEO of Managing Director of Her Mind, corporate and subscription box gift company.
Oh yeah, I see their website. They're cool. I like that.
Right now. So they are an LLC filing as an S Corp, and they just set up QuickBooks Online. They're looking for a new accountant who has experience with inventory in e-commerce space, such as Amazon and Shopify. Is that an area that you have experience in? And she's asking this because e-commerce inventory management and accounting is a little different than regular retail.
No, it is. And again, and the thing about it is, it's a matter of who your merchant processor is, to make sure that it's being tracked and how that information is coming into your QuickBooks to make sure everything's getting tracked. And also your QuickBooks has to be set up properly so that tracking can happen, so you can maintain that inventory properly, like you're saying. I totally agree. It's not the same thing as, hard assets, inventory sitting in a warehouse kind of thing. So that's, so there's some different factors you have to think about when you're doing that, and making sure that the two are talking to each other properly.
Oh, perfect. All right. So, Melissa, for those interested in starting a business, feel free to use those links in the chat to register for no-cost one-on-one technical assistance with us, and also become a part of our Community Navigators program, so that we can help you start your business. That's what we're here for. There are a lot of resources that are available to you. So make sure you utilize that. We do have another one of our members that is a bookkeeping on here, Sherilyn and Laura Westbrooks of Budgets Made Easy. So I want to make sure that we have a consortium of businesses as part of the Miami-Dade Chamber of Commerce. Many of our all-stars like Hervé Bond of Bond Accounting and Stephen Enriquez have been with us for many, many years and helped out hundreds of businesses over the years to take the headache of managing their finances, although it helps to relieve some of it, because you still got to be engaged and involved. So, Stephen, I want to thank you very much for taking the time to be with us today. Could you, well, actually, let me run through these announcements real quick before we close out. So, as I said, we provide one-on-one technical assistance with our program through Miami-Dade County and also the SBA. So hopefully, are you seeing my screen? Here we go. All right. So all you have to do is visit www.m-dcc.org, go to our technical assistance page, and you can register for our assistance. We have 2 technical assistance coordinators. On one of them, we just brought on Gina, that's also working with us through the FIU Community Navigator Program. So we're here to assist you in developing. We do these workshops on the regular. We've been doing them for many, many years. From fundraising to cybersecurity to PPP to government contracting. But this year we're focusing on the ABCs of business. So make sure you go to our events page, www.m-dcc.org. Our next one will be about formulating and developing your business plan, one to access capital, and also for you personally understand how you're going to generate revenue and sustain yourself, your family, and your business. So that's coming up April 21st. One of our most powerful events that we have on a regular basis is on Tuesday at 4 o'clock. Every Tuesday at 4 o'clock on Zoom, we have between 20 to 40 business owners, entrepreneurs that just started or been in business for over 20 something years. We have our partners from CareerSource, Miami-Dade County, Miami-Dade County Public Schools, branches, SPD Center, Access Help. So many come on, and it is a one-stop shop to hear from other business owners going through this journey. We talk about our accomplishments, our challenges. How do you deal with a discount to an employee? How is this war and inflation affecting your business? To bringing on amazing people and speakers like the director of Miami International Airport, telling us about the business opportunities there, to pitch it. A startup that's focused on really telling your business story. So make sure you come in and join and log on to our small business meetup so you have a community. You can do this in all of our services. You do not have to be a member for these specific services. This is free and open to the public, and this is what we do with our partners at Miami-Dade County, CareerSource, FIU, and the SBA. For our members, we do have our membership meeting coming up next week, April 7th, where we'll have the Vice Chairman of Miami-Dade County, Vice Chairman Oliver Gilbert III, come to speak to us about lifting all boats. These are all networking opportunities like our annual Business Leaders Luncheon, where we give awards for our Small Business of the Year, Corporate Partners of the Year. These are the opportunities where you get to network with the movers and shakers in the community, and get excellent information, insight about what's going on in the industry. And if you haven't heard, Miami is booming as a tech hub. And we're partnering with the Knight Foundation to put on the Miami and Tech. What does it mean for the Black community? And one of our 4 major events is coming up is our Little Black Dress and Pearls, which is like the who's who of women in business and development. So I strongly encourage you to take some time to participate. Like I said, we're here, we're part of this Community Navigator Program, we are part of a consortium, and we're here to make sure that you have the resources and opportunities that are available to you. We want you to take advantage of these resources. There is help for your business. Reach out, and if you're afraid of reaching out, that's when you come to us at the Chamber. We're the ones that help you get prepared so you can take advantage of all these resources, access capital, understand the basics so you have a solid foundation. So again, I want to thank each and every one of you for joining. I want to thank Stephen Enriquez and also Hervé Bunny for joining us today. Stephen, do you have any last comments before we close out?
No, just thank you very much, everyone. Hope I was somewhat helpful. Good luck with your business. Get help. That's what it's about. You know, no one does everything by themselves. You know, I outsource certain parts of my business, my marketing and IT, because I'm not an IT guy, I'm not a marketing guy. Outsource, you know, the parts that you're not an expert on, or get help with those parts. That's the only way you're going to really get your business going.
And could you share your contact information and those may be interested?
Yes, Stephen J. Enriquez, CPA, LLC. Phone number is 305-423-6399. My email is Steven, S-T-E-V-E-N, @sjh-cpa.com.
Awesome. Thank you very much, everyone, for joining us today. Continue to spread the word. This will be up on our website if you heard something that you want to learn more about, but make sure you register for our 101 Technical Assistance Program so that we can take the information you learned today and make it a practice in your business. We look forward to seeing you again, and you take care, everyone. Thank you.